Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. I hope you have a great weekend. But still, tomorrow is starting a new business week and we should discuss what we could expect on the gold market. Well, in general, in the gold market this week, mostly the same story on Forex. As we said yesterday in the weekly report, this technical situation on the Forex, at least in euro currency, is not very interesting because nothing has happened within the 5 days, or better to say 4 days, because Friday was an independence holiday in the United States and markets haven't shown any activity mostly. And in general, market was standing in a very tight range, so it doesn't bring any new patterns, setups, at least on the daily chart. On the intraday we could find something, but on the daily it's nothing to discuss, and we just need to sit in the hands and see what will happen when the market will show some breakout in one or other direction. On the gold market, well, approximately the same story. Maybe it's a bit more interesting compared to the Forex, but still, in the general, as you can see, this recent 4 sessions also was in a very tight range. Besides, 2 sessions were inside one, and the market shows the reaction of the first butterfly target. So, on the gold, in the longer-term scenario, we do not see, well, any doubts that something could happen. We still keep our long-term bullish view on the gold. And all things that we will talk today mostly have the, well, tactical relation. It has no real impact on the direction. So mostly it could be important for those of you who trade on intraday charts. And in general, of our discussion of the levels where a market could finish the retracement, how it could turn up, and so on. That's actually the major purpose of this video today. So reaction stands very small. This is good because market completed the butterfly target, but overall pullback is very small and market holds above the previous top. This is bullish sign. That led us to expect and keep an eye on the possible action right to the 1823 target, which is the next butterfly extension. 1823 is an area of the minor top on the monthly chart of 2011. So major top stands around 19 even, while the minor top stands also around it, but a bit lower, so around 1823. But it's also important for the daily chart because it's a lower time frame and it will react to many previous tops that have been formed, especially on the monthly chart. But one thing that I would like to say is that on the monthly chart, the June month almost, well, at least we could treat it as the bullish reversal month, and it's a very good sign that indeed gold could proceed higher in the nearest time. So that is what we have on higher time frames. Take a look that on the daily we have interesting placing of the pivots of the coming week. So market will open right around the weekly pivot. Pivot resistance 1 stands 79 in the previous top. And again, here pivots we could use as indicators. So the breaking of this area simultaneously means that market is moving above the weekly pivot resistance, and that is a clear sign that the previous former upward trend is continuing. So that's important. To the downside, as you can see that pivot support 1 stands 1758, and if market will break it, it tells us that we should be prepared for a deeper retracement, because this is not just a retracement within upper trend, but it means that more extended trending action could happen on the gold. This is the application of the pivots that we could make on the common view. What we have on intraday charts. On the intraday charts, it's also interesting placing on the pivots and Fib levels. Let's first take a look what's going on with the support levels. First of all, 1756 is the first support. and pivot support one that we just talked about coincides with this level. But more important to us is conference support 1737, approximately 1744. It agrees with the neckline of our hand short pattern. This pattern is still valid, guys. Market hits just the OP, but we know that the XOP and the major target of the hand shorts, again, coincides with the same 1823 level. 1823 level, it's also monthly pivot resistance one. And monthly pivot itself coincides with the neckline. So you can see gold lines coincides with the neckline and agrees with the conference. So that is very important level. And in general speaking, why we in general talked about the possible deeper retracement, this July pivot point has not been reached yet. It has not been tested. That's why we can't totally exclude that market could form some kind of this ABCD pattern or something of that sort to reach this level. Well, this is possible. On Friday we have found few grabbers that have been formed, and here's even more. Grabbers have appeared recently on Friday, so you can see this is a cluster of the grabbers that suggest dropping below these lows. The market stands tight around this resistance. But situation stands really tricky. Scrubbers have been formed, but market hasn't started action on Friday. With the divergences, yes, we have this divergence in place, but take a look. Recently we've got another one, but it stands in opposite direction. So here's hidden bullish divergence that suggests upward action. So, as you understand, overall situation stands, well, so-so, it's 50-50, because we don't have clear patterns in any direction. Overall sentiment is positive, and in general we're searching chance for a good placement to buy gold. But in the beginning of the next video, market stands well. In the beginning of next week, when the market stands not at some strong support and it hasn't formed any significant pattern, we do not exclude that maybe some downward action still could happen. That's why if you are following conservative approach and you do not like the situations, we do not see any signs, any patterns, and it's a bit make you nervous, become nervous, so it's better to do nothing. Well, wait either for the breakout, the upside I mean, or just wait for reaching of the strong level. Here in strong level you at least will be protected and get the chance to take the position without any risk. So because minor pullback definitely should happen from the level, and you will get the chance to move stops to the break-even. If you're an active trader and you trade a lot and different stops, well, in this case you could consider, first of all, as we described on Friday, dealing with the grabbers, because indeed some pullback here could start. Or you could consider, alternatively or together, you could consider taking the long position with the stop buy order. When the market will show the breakout of this area, erasing of the grabbers, it's possible to place stop buy order with anticipation of further action. Because guys, when I'm taking a look at the hourly chart, it really reminds me of the situation that we've got on the last week, and we have traded it. So remember what we said in last week. Consider this tight consolidation is bullish dynamic pressure, that we will get lucky if market will show this pullback, and indeed that has happened. Our expectation of the explosive action also has happened. So you can see market really shows the upward breakout. And take a look what we have here. The same huge bullish engulfing, the same as here, tight consolidation of the triangle, and hint on the bullish dynamic pressure, because trend stands bearish, but price action is not. It's very similar. Maybe, again, 30% pullback will happen, but what will happen next? Maybe market indeed will show the reversal and upward breakout. That surely could happen. That's why I'm talking about the possible applying, using of the stop buy orders above this area. So, as you can see, all our talks mostly about some tactical issues. They have no impact on the major direction. And that is what these models that we just have discussed, it will be your home task. Think about them, decide whether you would like to take the journey and all the stuff or not, or but to say sit on the hands and wait what will happen, or maybe trying to sell or buy, or first sell and then if grabbers will be raised the buy, take more active participation in the trading. So that's choice is up to you, but I'm just present you setups that we have, and that potentially maybe could be interesting to you in trading.